Hello and welcome back to another video. In this episode I'll be talking about order blocks and how you can trade them. I'll give an example also from the market. So big market players such as big banks distribute a single order into a check of blocks. For example, in this example they open buys here so that the market will move up, and then they leave others in form of sell buy limits. So they leave a lot of buy limits here so that when price comes back, they trigger the buy limits again so that they don't lose their open positions, because these are big institutions that use billions of money, so they do not want to go into losses. So to identify a strong order block, there must be a change of character in the market direction. For example, in this case, the market is making is breaking structure to the downside. This is break of structure. So this is a clear downtrend because it is making lower high, lower low, lower high, lower low. And then there is change of character. This is referred to as choke. Change of character. So change of character is a signal that the market is changing direction from making lower low, lower high, lower low to making higher high, higher low, higher high, higher low. So this is a change of direction from a downtrend to an uptrend, and therefore this makes a valid order block, which is indicated by the last candle, the last bearish candle here. So I'll be giving an example in the chart. Similarly, this is an uptrend, clear uptrend, because the market is breaking structure to the upside. It's a break of structure to the upside. And then there is a change of character here. So one thing to note is this change of character can only be valid if this high has been broken to the upside. If, for example, this was a lower than this high, then this would not be valid. So the change of character would be valid if it breaks this. This becomes the stronger higher low. So always make sure you confirm that the only change of character that is valid should be above this high, so that it should be a break of structure to the upside and then it breaks this low. Because for a break of structure to be valid, there is a continuous respect on this line here. So this one was not respected. There was break of a change of character. If this line was respected, then there would be no break of structure. It would still be continuous uptrend. That is very important. Even on this one, if we can check these lines, so this must be respected. So this one was okay, it was not broken, but this one was broken and it led to change of character. That is a good point to note. So let's look at a real example from NZD/USD. So this is a clear downtrend. The market is making lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So for valid higher low, this line, the break of structure, these lines must always be respected. So there is break of structure to the downside. So break of structure is a confirmation that we're still in a downtrend. This is also a break of structure here. So let's see if there will be continuous break of structure. So there is a change of character because this line has been broken. So this turns to be a change of character. So it means there is a change of direction of this market. For example, we are now in a downtrend, but we have a signal that the market is about to start an uptrend. An uptrend is looming. So this is a clear sign that there is a change of market direction. Now, order block. Now you will define your order block in this zone. So you'll use, so this last red candle becomes our order block. So this is the last candle this is the last bearish candle before a bullish candle that led to a massive move that caused the break of structure, the change of character. So we will watch the market until it touches this zone. So we'll be waiting to buy when the market reaches this point of interest. We can call this point of interest. We'll be waiting to see the market behavior when it reaches this point. We'll be looking for buys at this zone. So back to our order block definition. Big banks or big market movers will take a lot of buys here and leave open positions, leave buy limits at this zone. How do you notice that these are banks or big market makers who are in the market? The whole way to note is when you see these gaps, there is a strong momentum in the market. There's a lot of strong bullish momentum. That means this is not your ordinary retail traders in the market, but there are other big institutions, big players in the market. So the market is moving, making big, huge candlesticks, and they are leaving gaps in the market. And this is what ICT is calling fair value gap. And if you have not watched my video on fair value gap, I'll leave a link, and you need to watch it also to understand how to point out the fair value gaps. These are gaps in the market that must be filled. So this is how the banks have done, or the big institutions have done. they have taken buys here, so their positions are open, and the market is coming back. The price is coming down. So they have open positions that are running here. So they have other buy limits here, so that when the market touches this zone, the price touches this zone, because the market must always correct. The price must correct. It must fill these gaps as it comes back to correct these huge candlesticks. So they have buy limits again pending in this zone. So from the perspective of big institutions that are in the market, they have open positions that were in profit, but now since price is reducing, they are now losing their profits. So as the market retraces down, they are losing profits, and they are likely to go into drawdown. So they do not want to go into losses. So they have buy limits in this zone, so that when price touches here, instead of getting into losses by breaking this structure to the downside, they again get another momentum upside, and now it goes to break this high and continues in an uptrend. I hope this is very clear now. So the market triggers their buy limits here, and now you should be prepared to take a buy in this zone. So you can enter your trade here, and then your stop loss will be below this candle, or you can slightly below this zone, and then you target the first profit will be this higher high, and then you can continue. You can trail your stop losses as the price continues. The first take profit has been hit. The market continued. To this far, thanks for watching. If you gained value from this video, please like the video and let me know in the comment section. Also, if you have not subscribed, please do so that you don't miss when I post content like this. And until next time, peace.